Good morning, everyone, and happy Monday. Welcome to another episode of Wake Up with YPN. I'm Kayla Fisher, your chair of the YPN this year, and I'm excited today because we have Jessica Greving, who is also the sponsor with Residential Mortgage Network of today's episode, to help us learn about all things loans. She's a loan officer, and we're excited to have her. So, to start out, good morning, Jessica.
Hi, Kayla. Thanks for having me.
Yes, thank you so much for coming on. I know that we know each other pretty well, but for those of you who may not know you, could you tell me a little bit about yourself and your career history and where you are today?
Sure, you bet. So I am a mortgage loan officer at Residential Mortgage Network. I started long before many people start in this industry. Through high school, I did some back office work, and then while I attended the University of Iowa, I did processing and closing. And that trained me to be a loan officer. So once I graduated, I became a loan officer. This business is sort of addictive. You start to get all of knowledge and just kind of stick with it. So it's all I've ever done in my career history.
I love that. And you know so much. And so we've invited you as our guest today. So diving right in, if we have buyers, we want to know how you select what loan type works best for them. But in order to start talking about that, can you tell us a little bit about the different loan types and kind of what their differences are?
Sure. So the industry as a whole has four different types of fixed rate loans. People can do a regular conventional loan, a VA loan if they've had military service, an FHA loan, which is just another loan type, or a program called Rural Development through USDA. So those are four different loan types that borrowers can choose from, and a lender can help them choose that. And then there's also some first-time homebuyer programs, grant programs that can get added on in addition to those loan types that are available.
Good to know. And then I know that you mentioned FHA, and sometimes us realtors feel like there may be a stigma against FHA loans. And I know that you're really good at advocating for those products. Can you talk a little bit about that?
Yes, thank you. I always love the opportunity to talk about FHA loans, and sometimes VA loans and rural development loans can be lumped into there, where it can make some realtors or buyers or sellers a little bit nervous. And my opinion is there is no reason to be nervous for those, especially if you're working with a lender that understands how to do the program. And if they underwrite them right at their office rather than brokering them. So, what I try to explain is that just working with somebody, understanding how their operation works to do the loan programs is what's most important. FHA loans, those loan types, sometimes people get a little bit nervous about the condition of the property. And it is true that an appraiser is held more accountable to the condition of the home, but they've really relaxed a lot of those guidelines. So if anybody has any concerns, it's best to talk to the loan officer about anything specific with the property. But the main things would be chipped or peeling paint or the condition of the roof. But other, cosmetic issues, none of those are an issue. So many times people will be concerned about the condition of property, and then we get an appraisal back and there are no repair requirements. So just communication is a great way to not feel nervous about those programs.
Yeah, and so that's kind of the negatives or the stigma that we try and get around. But can you talk a little bit about why those loan programs are beneficial to a buyer and why a buyer may choose to go that way versus a conventional loan product?
Yes, of course. So if we're talking specifically about FHA, if we're looking at somebody and comparing an FHA loan to a conventional loan, the benefits to an FHA loan, sometimes a borrower just hasn't had enough time maybe to build up their credit history. And if they don't have a perfect score or above 760, they might not get the best interest rate or the best PMI that's available with a conventional loan.
Mm-hmm.
So doing an FHA loan for them can give them more buying power. They can qualify for more. Their payment is often lower than what it would be on a conventional loan. So that's why it's important too to work with a loan officer in an institution that actively does both of those loan programs so that we can give the comparison. Also, down payment is an issue where there are options under conventional loans to do 3% down. Sometimes it requires more. FHA loans, 3.5% down payment requirement. So we're looking at down payment, credit score, where the funds are coming from to help determine which program is better for the borrower.
Okay, that's good. That's great. And then switching to rural development, can you talk about the benefits of that type of loan?
Yes. So a rural development loan, also sometimes called USDA, is available in smaller communities. So within our market, the communities that are not eligible are Iowa City, Coralville, North Liberty, and Cedar Rapids and Marion. So it's easiest to think about the ones where you can't do it, but any of those other communities like Tiffin, Williamsburg, Solon, those are all eligible for the rural development program. And that program, the biggest hurdle to homeownership for a lot of buyers is down payment. And that's what USDA recognizes. So in those communities, you're not required to put money down and you still get a 30-year fixed interest rate. So a buyer is responsible for paying closing costs and prepaids unless it's negotiated for the seller to do that, or we pair it with a first-time home buyer grant or assistance option. But otherwise, if somebody's eligible for a rural development program looking in those communities, it's almost always the very best option for them.
Yeah, I've had quite a few buyers take advantage of the rural development program, even before North Liberty became too big for it.
Yes.
But Tiffin is still eligible, and that's surprising to me, but just based on how quickly it's growing. So,
Yeah.
um,
And the other thing, sorry, that I'll mention about those programs, sometimes the stigma around FHA, VA, and rural development loans is they take a long time. We'll get those calls a lot, like, well, we wanted to close within 30 days. So the good news is if you work with an institution like us, an independent mortgage banker, or an institution that underwrites that program, they should not have any trouble closing within 30 days. Sometimes we can close faster than that. But we certainly, I think it's a little bit of a red flag if an institution says that they need like 45 days to close on a loan program, because it probably means that they broker it out. And it just changes how the process goes a little bit.
okay, yeah, that's helpful to know. And then a little bit about conventional. Can you talk a little bit about the flexibilities and when that might be a good fit for someone?
Yes, definitely. So a lot of times people don't realize that a conventional loan, you don't have to put down 20%. So some people get that in their minds that they want to put down 20% for different reasons, but you can put down as little as 3% on a conventional loan. And we can also pair that with a first-time homebuyer program through an entity called Iowa Finance Authority. Iowa Finance Authority provides 5% down payment assistance, so that can fully cover that 3% down payment requirement. People sometimes get nervous about PMI, private mortgage insurance, that's required to be paid when you have less than 20% down. But on conventional loans, especially with really good credit scores, or if you've owned a home before, there's lots of factors that can make that PMI really quite competitive. So a pretty low rate. So I really encourage people to not feel like they have to save up that 20% down. They can pay a little bit of PMI and probably not impact your loan all that much.
Yeah, and I think just hearing this little easy dive on some of these details is really helpful information for us to know when talking to buyers who may or may not have talked with a mortgage lender yet, to make sure that they're connected with someone who's going to compare them and help put them in the right bucket or loan product for them. And to all of our realtors and affiliates tuning in today, if you have any questions for Jessica, put them in the comments while we're talking, and we'll get to them at the end. But as a realtor, what is something that we can kind of advise our people if they have not connected with a loan officer? What are the do's and don'ts of that loan application process that we can help prepare them for before we send them to a loan officer like you?
Yes, great. So first of all, as realtors know, but I'm just reiterating the importance of getting pre-approved. The number of people that come to us that have already looked at several homes or maybe even have an accepted offer and they haven't gotten that pre-approval yet, it's so critical for everybody that's involved in the process. And it also gives a loan officer an opportunity to tell them the do's and don'ts, which we always talk to people and remind them it's not a good time to change jobs. It doesn't mean you can't, but make sure you have a relationship with your loan officer to be able to talk to them about it if you need to change jobs, to make sure that it won't impact a qualification.
Mhm.
Also, not taking out new loans. So don't open new credit cards, furniture loans, car loans. It can impact your qualification. Just know that. And another big thing that we run into a lot are cash deposits into a bank. So people like to save their cash at home or get a chunk of money from a family member, maybe to buy the house. And if a bank statement has those deposits, it can be a little harder to document after the fact. So again, the sooner you establish a relationship with a loan officer and let them talk you through those details, the easier the process will be for you when you have an accepted offer.
I think those are all really good things. And I just have to note that the other day I pulled up to home inspection and the buyer pulled in behind me in a brand new car with all the stickers on it, and my heart sunk. And I was like, oh no, I know I had this conversation with them. I know their loan officer told them. So I got out of the car really skeptical and I was like, oh, did you get a new car? And I was relieved to find out that no, their vehicle was just in service and this was the loaner that the dealership had given them. But I was like very worried. So it is important to have those conversations up front because it can be an exciting time with lots of life changes. And, people are buying a home, they might be adding a family member. And so they might need to get a new vehicle, but it's important to know that they should do those things separate from the loan application process and hopefully after closing so it doesn't mess those things up along the way.
Yeah, and sometimes people think once they're pre-approved, then they're free to do whatever they want. And we try to give people lots of reminders that because you're pre-approved based on your current situation. So that's why it's so important to keep that situation the same. And then Kayla, so we don't forget, I hadn't said much about VA loans yet. And that's a product that we never want anyone to miss out on. So if somebody's had military service, the same thing, and working with local institutions for VA loans, they shouldn't take longer than any other loan program. But in most cases, a VA loan is the best option for somebody you can do 100% financing. Interest rates actually a little bit lower than a regular conventional loan. So keeping that on the radar for buyers if they're eligible for that.
Yes, I'm so glad you brought that up, and I'm sorry that I missed it in our agenda here. But no, I definitely agree that it does seem like if they are veterans and eligible, that it is the best product for them. And we would hope that sellers respect that and respect their service that they've given to. We have a question here from a viewer. Can you explain for everyone the difference between a pre-approval versus a qualification letter?
Yes, very important. So my opinion is that a pre-qualification letter, you really shouldn't be shopping for homes and making offers with a pre-qualification letter, because that means you've really just kind of had an initial conversation with a lender, maybe talk through a few details of what might be a good option for you, but it hasn't solidified everything. Once you've gotten pre-approved, that letter should no longer be contingent on verifying income, verifying assets, pulling credit, nothing like that. The lender should have pulled credit, collected paychecks, collected bank statements, and really made sure that everything is good to go. So when you have an accepted offer, it'll be smooth sailing from there. So doing that official pre-approval is what is most important. So that's a great question.
Yeah, having that and understanding the differences, even from the realtor side, even if you're the listing agent, if someone attaches the letter to your offer, you can really dive into what exactly that letter says, because sometimes there's clauses or sentences in there that lead you to believe that maybe there's more work that could have been done in advance to better vet that buyer. And in competitive offer situations, that can matter and help the seller feel reassured that the buyer is qualified and approved.
That's right.
So we've dived into a lot in just a short 13 minutes, and we could talk all day about it because you're so good at explaining things and educating borrowers and realtors. What are some things, based on your experience, that you would recommend that realtors can proactively do to be more aware when talking and working in the market?
So I think, any opportunity that a realtor can have to visit with lenders about their particular products, because every institution has different things to offer. And you can do a lot of that research, through their websites online, see what their active numbers are for programs like Iowa Finance Authority, rural development, that type of thing. But just really trying to educate yourselves as much as you can, because I try to tell a lot of realtors I work with, don't worry about the loan side of things. We've got that covered. But just having a few little nuggets from a few different loan officers that you're comfortable working with, so you can make sure to get that information out. Like when the VA grant is available for veterans, $5,000. So many veterans missed out on that if they ended up with a lender that didn't participate, and if their realtor didn't know enough to make sure that their lender participated. So just grabbing any of those nuggets of knowledge that you can.
Yeah, I mean, every day is a school day, as I've heard before in this industry, and no 2 days are the same. And so connecting with people here on our local market is really important, and kind of pre-knowing some of those questions. I know that, realtors can sometimes get ahead of themselves and start explaining all the differences, but the biggest thing we can do is educate ourselves with some leaders in the community so we can connect them to the experts of financing.
Right. And making sure, like, I mean, just like anything, communication is huge. So making sure that you're working with loan officers that are available for questions. We kind of have to be available all the time, right? Because there's a lot of things that are happening on the weekends and the evenings, and you don't want your buyer to miss out on it because they couldn't quite get their question answered that they needed.
Yeah, I think that's very true. I don't think that we have any more comments, and that just means that you did such a great job explaining all those different loan types. Is there anything else that you'd like to add before we sign off and start our weeks?
No, I don't think so. Just, yeah, I don't. I think we covered a lot, but I'm always here for questions. People sometimes apologize for asking questions, but that's what we're here for. We don't know what people need to know, sometimes until they ask those questions. So I encourage people to reach out anytime anything comes up.
Yeah. Well, thank you so much for being an affiliate of ICAR and sponsoring today's episode, and for spending time with us to answer our questions and kind of give us a little bit of a lesson going into our week. And I hope that your week is full of not all rain. Hopefully the sun will come back. And thank you for everything that you do. And we will see you next time.
Thanks, Kayla. I appreciate you.
All right. Have a great day.
Have a good day.